The market values of Apple and Exxon have converged again after Apple had surged ahead last year, and now they're both around $400 billion. And it seemed to me that was the only thing they really ever had in common. People were looking at Apple, obviously the big gadget maker, Exxon, an oil producer. Didn't make a whole lot of sense other than the fact that they were both the biggest company in the country. But Rob Searon and Chris Swan have taken a look and actually find that there's quite a bit more in common than we previously thought.
Well, the other thing, if you look at the valuations, they're remarkably similar. They both trade about 10 times earnings. And what's happening is, if you think about it, both the companies, you know, what's going to be their future? And the problem is investors are increasingly skeptical about the futures of both these companies, both the margins and what business they'll have at all in the future. For the tech company, it's obviously, you know, a lot of people have smartphones, but what's going to be the next gadget that Apple can provide? They always have to keep on filling the pipeline. If they fall short,
innovation is really, will they be able to come up with another new product? And it's kind of similar to what Exxon is facing. I mean, it's a technology question, but in a different way, obviously.
Well, I suppose that the big problem with Exxon is every year you look at their results, they're always boasting in a strange kind of way about how much they're spending to replenish their pipeline of oil. And because all of the low-hanging fruit has been used up, they're now extracting more from rocks. They're getting more from the deep oceans. They're looking to the frigid Arctic regions. Those are really expensive.
And they require a lot of investment and a lot of innovation, really,
yeah,
to get at it.
Capital spending now is at $40 billion a year, and that's up about 90% over 2007. So it really has been ramping up very quickly. Obviously, that's a really margin-crushing problem.
So investors in both companies are worried about where the next big thing comes from, and it's obviously expensive for both companies.
Yeah, and it's not just that. It's also that they're worried that profitability is going to decline in the future. We
saw that a little bit, right?
We saw that with Apple, because they had to keep on introducing lots of new products to keep up with rivals, Samsung in particular. They introduced a new iPhone, new iPad. The problem is these things aren't that profitable yet, because it takes a while. When you introduce a new product, the margins aren't quite there yet. They're low and they increase over time.
Right.
But if Apple keeps on having to introduce products at a rapid pace, that means their margins are probably going to decline. And if a price war breaks out, that's even worse.
Right? And that's the same. I mean, in a way, it's slightly different, but it's more about the investment hitting margins for Exxon, right? That's where people are worried that the compression will come.
Yeah, I think that you notice it because you have record oil prices in 2012, and yet profits didn't hit a record level they saw in 2008. So it's an ominous sign that the best days may be over for Exxon.
Okay. Well, we will keep an eye on both companies, of course, and we will be back with more Breaking Views tomorrow.